instead of them offering you a loan modification, they try to shove a repayment plan down your mouth, down your throat. You're like, hey, I don't want that. I want a loan modification. They tell you this is the best they can do. Folks, you got to stand your ground. You got to know what you're asking for, because a repayment plan, I never recommend it. Let's say in that scenario you're 6-7 months behind. You have a normal mortgage payment of $2,000 a month. Well, they're going to take those arrearages, the late payments you have, they're going to divide that typically around 10 months. I haven't really seen more than 14, 15 months. But they're going to add that on top of your normal mortgage payment. So if you can't make a $2,000 a month payment, what makes you think that you can make a $2,600 a month payment? Statistically speaking, approximately 80+% of people that enter into repayment plans default after their second or third payment because they just can't make that increased payment. Now, folks, I'm not going to go into everything, as I mentioned before, for the purpose of saving time here. But remember, you can pause, fast forward, rewind this presentation to read everything that we've presented here. A short sale. Once again, a short sale is when you enter into negotiation with your lender, so your lender will allow you to sell your house for an amount less than you owe. Sounds kind of funny, right? You took out a mortgage for $300,000 and they're going to accept $150,000. Well, the reality is this, folks. If you default on your mortgage and you're about to go into foreclosure, and you took out a $300,000 mortgage, and now because the market, the market's crashed, the values of the properties are substantially lower than they were, just a few short years ago. If the property is only worth $150,000 now, the bank knows that even if if the property is foreclosed on, they can't sell it for $300,000 because no other lending institution would lend on that kind of collateral. On that piece of property, excuse me. So a short sale is when a lender allows you to sell the property for an amount less than you owe. The deed in lieu of foreclosure, we've already gone over that. Traditionally speaking, the lender would like you to list a property for at least 90 days. They want to see that you're making a valiant attempt to try to market and resell that property for them before they go ahead and just take that property back. Remember, folks, banks got into the business to make loans and make income on interest payments, not they're not a wholesale company, they're not a real estate agency. They don't want your properties, okay? What is a loan modification? Well, first let's go over what a loan modification is not. A loan modification is not a refinance, okay, folks? A loan modification is a process whereby a homeowner's mortgage is changed through negotiation, and both the lender and homeowner are bound by new terms. Now, these modifications include lowering the interest rate, converting an adjustable rate mortgage to a fixed rate mortgage, increasing the term of the mortgage, meaning if you have a 30-year mortgage, they can stretch it out to 40 years, in some cases even 50, okay? Forgiveness of payment defaults and bank fees, and in extreme cases, reducing the principal balance, which, folks, if people are advertising they can guarantee they can reduce your balance in a loan modification, tip number one, that's a scam, okay? We were successful at one point in doing it on very few files, but as the loan modification process has developed more throughout the years, you got to understand that lenders have hired, some of the best attorneys to try to, create solutions to try to curb their losses, okay? So this option really isn't a viable option anymore. We're going to go over loan modification programs. Yes, folks, there are more than one. The IndyMac Federal Bank Loan Modification Program. You have the FHFA program, which is a Federal Housing Financing Agency program. The Home Affordable Mortgage Program, or HAMP, or also known as the Obama Plan. Then you have the FHA Obama Plan, or FHA HAMP program, and the Lender's Internal Modification Program.